Good morning and welcome to another day of Trading with Rich. Okay, today's lesson is going to be how to exit a loser. Every now and then you get a loser like CCL. CCL, Carnival Cruise Lines, was sitting at about 27 a little over 2 weeks ago. Now it's at 23.72. I had put a put at 25 and backed it up with some insurance by buying a put at 24. So I sold a put at 25 and bought the backup insurance so I couldn't lose any more than the $100 per contract. So right now looks like I'm going to lose the $100 per contract, and the price before we open up here on July 9th 2021 is $23.72. So my hope is that Carnival jumps up, but if it doesn't and it goes down, I do have the insurance set at 24, so I have limited my losses. This is how you limit your risk. If I had done an unprotected put and set it at 25, I would either need to buy the 20, which times 100 is 2,000 shares. I would either need to buy that product at $25, no matter what the price is, or I can buy myself out of the contract, which is the 2640 minus the 780 that I've already made off of it. So I would lose about $1,860. So I didn't lose the full 2,000. I made a little bit of premium on it, but still, it's a loser. So what do you do when you get into a situation like this? This is going to happen with most traders about 20 to 25% of the time. If you can earn about 70% wins, then you're doing pretty good. So what I did last night was I went into the July 9th, which is today, and I put what I call a bookmark. I put a 5-cent order in for today, hoping that maybe it might jump up to 25 or 26 today. That's probably wishful thinking, but that $5 would go ahead and take, and I would be out of the obligation. If it doesn't go down to 5, then I'm still obligated for the 90 going into today. And if I want to adjust that order, I just go over here and hit edit order, re-enter it. But I will show you how you do that if you cancel it. Go ahead and hit cancel your order. Now it's no longer on there. So what I'm going to do is take this put that I sold and the put that I bought, and I'm going to trade it, and I'm going to clear out the orders, and I'm going to do the opposite of what I've done 2 weeks ago when I bought it and sold it. So I sold a 25 and I bought a 24. So to get out of it, I have to do the opposite. I have to buy it back, the 25 that I sold, and I have to sell the 24, which was my protection in case it went lower than 24, which at 23.72 it has done. So I'm going to change it from 91 is longer than July 9th. Yes, it's set at July 10th. So I'm going to click on the little calendar here and change it from the 10th to the 9th. It would take just a second because my recording software is working in the background. And I'm going to hit review and send again. And now it's got a good to date of 7/9/21. And now I hit the send order. And if I close, which is the X here in the upper right hand corner, I close this Carnival Cruise Line, which is at $23.72. Today, it's not open yet. Right now, when it opens, it looks like it's going to open at $24.16. So I might not lose as much money as what's showing out there for the ask. But anyway, we'll see, because it's about to be 8:30. So if I close it out, there you see it. I've got a 1 cent, I call it a bookmark, but it's an order. It's an order that says I'll pay you 1 cent times 100 stocks, which would be $1. I will pay you $1 to get out of this contract today. Now, like, I'm way, as far as from $25, I'm a ways away from that. But if this thing jumps down to 45, I'll be happy. Yeah, it's still going to be a loser, but I'll be happy. So the market has just opened. It just turned 8:30. Now you see that the 23.72 changed to 24.11. Now let's watch and see what it does. Hopefully it bounces up. And let's talk about what we could do with this. Now, we could go in and roll this to a future date. Still going to take the loss, but you're at the less than $1 from the 25, and I honestly do think Carnival Cruise Lines will be above 25 for probably August 1st on. So if I wanted to, I could go in there and say roll, and this is where you roll the positions, and it goes in there and it takes it out about a week, and it tells me that it would only cost me 17 cents to roll it backwards, because a 25 and a 24 is paying really good premiums. Why? Because that's in the money. This, put would be the same position I'm in right now at 24. This is actually, 25 on 25. So I would need to maybe make this a little easier to get to. Maybe, let's say a 23. And if I did a 23, then what would I pay? Well, now we're getting back up to the original amount. Remember, it was 92, and 23.72. Now the price is 23.96. So if I wanted to roll this thing up into a 23, I would actually have to pay 62 cents to get out of this obligation. Well, that's better than paying 92 cents. Remember, everything's times 100. So, and that's times the number of contracts you have. So if I had 50 cents on there, 50 cents is $50 times 20 would be $1,000. So I could actually put this in at 23. Now, I honestly feel that it's going to go higher. So I'm going to move this down to 24 and 23. I'm going to take this week's and move it to a 24 and 23. That would be 37 cents. So if I want to roll it farther out, I can actually make more premium, but I've got my money tied up for a few more weeks. I have no problem, which is what I do a lot, is going out to, say, July. Same thing, doing a 24 and a 23. Make this do the opposite here. I'm selling out of it, so I would do the opposite here. And you can actually swap it by hitting the swap button here, and it'll swap them. I'll sell 20. Oops. I'll sell 20. I highlighted a grade, the 107 there. We're selling 20. Whoops, went a little bit too far. And I'm going to buy 20 as insurance at 22. And that would pay me $1.32 credit. So it actually looks like it's pretty good credit. Now it's going back down to 23.68. I don't have a really good feeling on which way this is going to go. But what I'm going to do is set up a credit for about $1.50. Then I can adjust it, because remember, I've got till 3 o'clock today before this clears out. And I've already got insurance at 24. So if it goes any farther, any lower, that's not going to kill me, because I'm already set at 24. So anything above 24, then that's gravy. I make some extra money. Anything below 24, I am covered, because I purchased a 24 put, and every time it goes below that, I bought a put. It's going to keep going up in value. This one will keep going down in value, and we'll close it out. Finally, let's set it for $1.50 and see if it takes. We'll watch it the rest of the afternoon, and it's only 7 cents away. Maybe I should raise that up a little bit, because I'm going to come back in and review it. I'm going to try to see. Who knows? It may go up to $24.50. You never know. I'm going to set it at somewhere around $1.75. We will check on this later and see how it's doing, and see what we end up with the losing proposition of Carnival Cruise Line. All the other stocks in this portfolio, all the calls and puts are all fine for today. We're just working with Carnival Cruise Line. So it's about 8:35, 8:37 looks like, 8:37, and we're going to sign off. Take a look at this later on today.